Welcome back. Joining me for a look at the equity space is Faheema Adia from Momentum Securities. Faheema, thanks so much for joining us today. Now, global markets have been pretty mixed this week, digesting economic data as well as tons of earnings reports. What I found particularly interesting is the JSE's performance. It's really been pushing through. I think we've had 3 straight sessions of the all-share in positive territory. Yesterday we did see a dip. Today it seems like it is on track to end the week on a strong note. What in particular is pushing that positive momentum on the local front?
Afternoon, Ntoleng. Thanks for having me. Yes, there was a lot of news coming out this week from the US in particular. Like you said, we've seen some earnings releases. We also saw that important GDP print for the first quarter. And I think, that did have a bit of an impact on our JSE yesterday. We did see some, the local market close a bit lower. But I think overall it has been quite resilient. Today it's opened a bit higher, up 1%. I think maybe it's a lot of positive sentiment also coming from this whole Anglo-American BHP deal. That's definitely driven the price up of Anglo-American shares, and just general positive sentiment, I suppose. And I suppose our stock market is just so undervalued at the moment. We are starting to see investors start to come back and to find some attractive stocks on the back of these undervalued players.
Look, I'm not complaining, okay? We always love seeing some green screens on the JSE. Now, I want us to just backtrack a bit and get into that US GDP print, coming in far lower than economists' expectations at 1.6% for the first quarter. This, as I said, far below that 2.5% estimate from economists. Are you concerned about these numbers and the slowing growth we are seeing in the US?
So I think it did take the market by a bit of surprise because we're so used to seeing such positive growth projections and results coming out from the US. So it's probably like the slowest reading we've seen in almost 2 years. And that weakness primarily came, though, from inventory and from government spending, which has slowed. So that's definitely something that was expected. So I wouldn't say we're too concerned about that. What is more concerning, though, is the print we saw from the core personal consumption expenditure that came in at about 3.7%. So that's more than double what we're seeing in terms of GDP growth. So I think that's worrying the market because it's showing that even though growth does seem to be slowing, inflation isn't slowing as quickly as what we had hoped, and that just puts the narrative of the rate cuts pushes it further and further out. So now we're probably looking at rate cuts coming through. It could be only November now. Yeah.
A really tight balancing act for the Fed, which makes it even more difficult to see any possibility of rate cuts here at home. But I'm crossing fingers and toes because as a South African, we definitely need that relief. Let's get into some earnings. We've had the four of the Magnificent 7 companies report quarterly earnings. Meta and Tesla, sort of disappointing markets, whereas we had Alphabet and Microsoft kind of topping those estimates that were being put down by analysts. Now, what have you made of those earnings? And maybe let's just get your sentiment around the Magnificent 7.
So of course, a lot of the returns on the US markets was due to those Magnificent 7 stocks in the first quarter. So I think that was definitely great for the first quarter, but we're unlikely to see the same returns in this quarter. At the moment, I think a lot of the valuations are looking quite overstretched and the pricing on those. But if we look at the results, it has been a bit of a mixed bag. Like you said, Alphabet and Microsoft released results yesterday. That was looking quite good. They beat expectations on the top line and the bottom line. And that's basically been driven by the AI integration that's expected to drive software there and cloud revenue growth. Alphabet also was able to announce a maiden dividend. AI is expected to, like I said, fuel the cloud services growth on this one. And then if we look at Tesla, though, that was a miss on the top and bottom line, but it seems the market is feeling a bit more positive about Tesla now that they said they're going to be introducing more affordable vehicles. So yeah, all in all, it's been a bit of a mixed bag.
And Tesla really, really struggling when we look at the competition and what's been happening in China. It is quite difficult for them in this market, right?
Yeah, definitely. I think the fact that China has just been producing so many electric vehicles. If we look at BYD, which is China's biggest EV manufacturer, they're taking so much market share from Tesla in other markets like Europe, for example, just because they're competing so aggressively on price. They also have a better variety of models that are more favorable to consumers. So I definitely think Tesla is trying to play catch up now. And that's why they're trying to introduce more affordable models, different varieties that are just more appealing to consumer tastes so they can keep up.
Faheema, before I get your stock pick, I just want to get into some M&A activity that we've been seeing this year. Now, miner BHP made a near $40 billion takeover bid for its rival Anglo American. It showed particular interest in Anglo's copper assets. Markets seem to love it. We did talk about it at the top. Anglo share price jumping to close to 19% in yesterday's trade. Things are looking a bit different today when Anglo rejected the proposal. So a lot going on in the mining sector. Do you think BHP will come through with another offer?
Yeah, so I think it's not exactly the final offer they've made. They have until the 22nd of May to finalize the offer. I think it's just kind of the prospective stage where they're kind of just guiding the Anglo board. But of course, like you said, the board was very unhappy with that offer, saying that it just does not take the full value of Anglo American's assets into account and the future growth that is expected there. And of course, those very valuable copper assets. We are expecting to see the copper price move much higher in the next few years on the back of deficits in copper, and copper is, of course, going to be very important for the clean energy transition.
So mining not where you're seeing value right now. What is your stock pick?
So yes, I think until we see more of a turn in that commodity cycle, we're holding off a bit on the mining sector, but my stock pick is ShopRite. So yeah, I think given, the uncertainties ahead, given higher inflation in the US, and also there are headwinds to our own inflation projections locally due to increased fuel costs. There's also been increases in electricity and water tariffs. We think it's important now to position yourself more defensively and to focus on a stock like ShopRite, which I think offers quite a lot of value at these levels. On the more positive side, we've seen quite a significant fall in food inflation since last year. So this will definitely position ShopRite to start doing a bit better in terms of volume growth this year. And if we look at that valuation, it's come off quite a lot, the pricing, and it's now trading at a forward P of around 17 times. I think if we compare it to the likes of its peers, it definitely has superior positioning in the market. It's been taking market share from its peers over the last few years. So that does seem justified. That 60/60 platform has been very successful because of its use of store networks as micro-performance centers. And we continue to see value coming from there, as well as the use of AI and data analytics that also enables it to get the pricing just right for its consumer. It competes quite aggressively on the pricing point. And it also enables it to get some very critical market insights. So that's why I think ShopRite is pretty well positioned now for the environment we're heading into.
Faheema, thanks so much for those insights and just taking us through the day's markets action. That was Faheema Adia from Momentum Securities.